The futures market does not forgive the unprepared. Contracts move, ticks count, margin tightens, settlement arrives, expiration approaches, liquidity shifts, rules are enforced, and leverage waits in silence. And if you enter this battlefield without preparation, the tick value will teach the lesson for you. Not gently, not slowly, and not on your schedule. This is the futures battlefield. Prepare before prediction. Review before repeat. Prepare before action. Segment 1. The field opens. The futures battlefield is not a place for casual entry. It is a market of contracts. Contracts tied to oil, gold, silver, wheat, corn, stock indexes, interest rates, currencies, and other instruments that move through time, expectation, supply, demand, policy, fear, and force. When a trader enters the futures market, they are not simply buying a chart. They are stepping into a standardized contract. A contract with specifications, a contract with tick size, a contract with tick value, a contract with margin requirements, a contract with trading hours, a contract with settlement rules, a contract with expiration. This is why the futures battlefield demands precision. In stocks, a trader may think in shares. In options, a trader may think in contracts and premium. In Forex, a trader may think in pairs and exchange rates. But in futures, the trader must understand the contract before entering the field. Because every futures product has its own character. Crude oil does not move like gold. Gold does not move like corn. Corn does not move like the Nasdaq. The Nasdaq does not move like Treasury futures, and Treasury futures do not move like currencies. Each battlefield has its own rhythm, its own liquidity, its own volatility, its own session behavior, its own reaction to news, its own cost per tick. That cost per tick matters. A small movement on the screen may not be small in the account. A few ticks may appear harmless, but the contract does not care how harmless they look. The contract calculates, the tick value applies, the position responds, the account absorbs the result. This is the first lesson of the futures battlefield. The market may look like motion, but beneath that motion is a contract structure. The market warrior does not enter futures because price is moving. The market warrior first asks, what contract is this? What does one tick represent? What is the minimum price movement? What is the dollar value of that movement? What margin is required? What session am I entering? What event could change the field? What happens if I am wrong? That last question is not fear, it is command. Futures reward neither ignorance nor excitement. The battlefield does not pause while the trader learns the specifications. It does not soften the cost because the trader was new. It does not protect the account because the entry felt obvious. The futures battlefield moves by contract, and the market warrior studies the contract before entering the field. The futures battlefield is powerful because it offers direct exposure. Direct exposure to commodities, direct exposure to indexes, direct exposure to rates, direct exposure to currencies, direct exposure to the forces that move global markets. But exposure is not command, access is not command, and leverage is not command. The unprepared trader sees opportunity. The market warrior sees structure. The first structure is tick value. A tick is the minimum price movement of a futures contract, but the tick is not just a mark on a screen, it has value. That value turns movement into consequence. When the market moves one tick, the account changes by a defined amount. When it moves several ticks, the consequence grows. When the trader is oversized, even normal movement can become dangerous. This is why the market warrior does not ask only, where is price going? The warrior asks, what does movement cost? The second structure is margin. In futures, margin is not the full value of the contract. It is capital required to control exposure. That access can create efficiency, but it can also create danger. Margin gives the trader access to force. But force without discipline becomes risk. A trader can be right about direction and still be damaged by poor sizing. A trader can identify a strong setup and still be removed by ordinary volatility. A trader can survive one move and then lose command because leverage created false confidence. The third structure is settlement. Futures are not casual promises. They are contracts with rules. Some contracts settle in cash. Some may involve physical delivery if not managed properly. Some require attention to rollover. Some expire. Some change behavior as expiration approaches. The unprepared trader may focus only on entry. The market warrior studies the entire campaign. Entry, risk, margin, liquidity, settlement, expiration, exit. Because a futures trade is not only a direction, it is a commitment to a contract environment. The fourth structure is product behavior. Energy can react to inventory, geopolitics, production, and demand. Metals can react to currency strength, industrial expectations, industrial use, and risk sentiment. Agriculture can react to weather, supply chains, harvest conditions, and global demand. Indexes can react to earnings, rates, liquidity, positioning, and market-wide fear. Rates can react to central banks, inflation, debt markets, and policy expectations. Currencies can react to macro pressure, interest rate expectations, and global capital flow. One battlefield does not behave like another. That is why the market warrior does not treat all futures contracts the same. The warrior studies the product, studies the session, studies the calendar, studies the risk, studies the rules. The futures battlefield is not dangerous because it is impossible to understand. It is dangerous because many enter before they understand enough. They enter before they know the tick value, before they understand margin, before they check the contract specifications, before they respect expiration, before they know the session, before they measure the risk. The market warrior does not do that. The warrior prepares first, because in futures, every contract has a structure, every tick has a cost, every margin position carries force, every rule matters, and every unprepared entry invites the battlefield to teach the lesson. This guide is not a signal. It is not a prediction. It is not a command to trade. It is a field guide for understanding the futures battlefield before stepping onto it. Because the market warrior does not seek exposure first. The market warrior seeks command. Review before repeat. Prepare before action. Segment 2. The cost of entering unprepared. The futures battlefield does not need a large move to expose an unprepared trader. Sometimes the damage begins with one misunderstanding, one contract entered too quickly, one tick value ignored, one margin requirement underestimated, one position size too large, one session entered without preparation, one rule overlooked. The unprepared trader sees movement. The market warrior sees consequence. That is the difference. In futures, every contract has structure. And when the trader does not understand that structure, the market does not wait for them to learn. The first cost of entering unprepared is tick value. A tick may look small on the screen, a slight movement, a brief push, a quick pullback, a candle forming, a level breaking. But the tick is not just visual movement, it is financial consequence. The contract defines the tick defines the value changes the account. The unprepared trader may think, it only moved a few ticks. But the account does not think in comfort. The account records the result. A few ticks on one contract may be manageable. A few ticks on too many contracts may become damage. A few ticks during normal volatility may be survivable. A few ticks during panic, news, low liquidity, or oversized exposure may become the lesson. This is why the market warrior does not ask only where price may go. The warrior asks, what does one tick cost? How many contracts are on the field? How much capital is exposed? How fast can the position move against the plan? What happens if the first move is wrong? That question protects the trader from confusing motion with opportunity. The second cost is margin. Margin gives access to exposure, but access is not command. The futures market can allow a trader to control exposure far larger than the capital posted. That can create efficiency, but it can also create danger. The unprepared trader sees margin as opportunity. The market warrior sees margin as responsibility. Because margin does not remove risk, it concentrates it. A trader may enter a futures position with confidence, but confidence does not reduce the tick value. Confidence does not reduce volatility. Confidence does not reduce margin pressure. Confidence does not protect the account from poor sizing. If the position is too large, ordinary movement can become extraordinary pressure. If the trader is wrong, the loss can expand quickly. If the account is undercapitalized, the field can remove the trader before the idea has time to develop. The third cost is contract ignorance. Every futures product has rules: contract size, tick value, trading hours, settlement method, expiration date, margin requirement, liquidity profile, rollover behavior. The unprepared trader may enter the chart without knowing the contract. The market warrior never does. Because the chart is only the surface, the contract is the battlefield beneath it. A trader who does not know the contract specifications is not entering with command. They are entering with exposure. An exposure without command is not strategy. It is risk wearing the mask of opportunity. The fourth cost is volatility. Futures can move with speed. Energy can move on supply shocks. Metals can move on dollar strength, inflation expectations, or fear. Agriculture can move on weather, crop reports, and global demand. Indexes can move on earnings, rates, liquidity, and panic. Rates can move on central bank language, inflation data, and debt market pressure. Currencies can move on macro conditions and global capital flow. The unprepared trader treats movement as invitation. The market warrior treats movement as terrain. Because not every move deserves entry. Not every breakout deserves pursuit. Not every pullback deserves capital. Not every candle deserves trust. The market may be moving, but the question remains, is the trader prepared to survive that movement? If the answer is no, then the battlefield has already issued its warning. The fifth cost of entering unprepared is settlement and expiration. Futures are contracts, and contracts have time. They do not exist forever. They expire, they settle, they roll, they change behavior as time moves forward. Some futures contracts are cash settled. Some may involve physical delivery if the trader does not understand the rules. Some become less liquid as expiration approaches. Some shift activity into the next contract month. Some demand attention before the trader expects it. The unprepared trader focuses only on entry. The market warrior studies the entire campaign. Entry, risk, margin, session, liquidity, settlement, expiration, rollover, exit. A futures trade is not just a direction, it is a commitment to a contract environment. Ignore that environment and the rules will not argue, they will enforce. The sixth cost is session and liquidity risk. The futures battlefield is active across different products, sessions, and global forces. Some products trade heavily during certain hours. Some become thinner outside their strongest sessions. Some react sharply when reports are released. Some move violently when liquidity disappears. The unprepared trader assumes that because the market is open, the field is safe. The market warrior does not. The warrior asks, when is this product most liquid? What report is approaching? What session am I entering? Where can spreads widen? Where can slippage appear? Where can volatility expand faster than my plan? Because a trade does not become safe because it is available. Availability is not permission. The seventh cost is rule pressure. In the modern futures arena, many traders encounter the battlefield through platforms, evaluation accounts, funded account models, or prop firm-style rules. Those environments may include daily loss limits, trailing drawdowns, position size restrictions, consistency standards, trading hour limits, news restrictions, maximum contract rules, payout conditions, and other requirements that must be understood before capital is placed at risk. The unprepared trader sees access. The market warrior studies the rules, because access is not command. A trader may understand the chart and still violate the environment. A trader may call the direction correctly and still break a rule. A trader may survive the market and still fail the evaluation. A trader may reach profit and still lose discipline because the rules were never treated as part of the battlefield. This is why futures preparation must include the market and the operating environment. The contract matters, the tick value matters, the margin matters, the session matters, the rules matter, the trader's discipline matters. The eighth cost is emotional acceleration. Futures can train the unprepared trader to react quickly. One tick, then another. One candle, then another. A sudden push, a sharp reversal, a position moving fast, a loss developing faster than expected. The trader begins to chase, then defend, then average, then revenge, then oversize, then hope. And once hope enters command, discipline has already begun to leave. The market warrior does not allow the battlefield to dictate emotional tempo. The warrior slows the decision before the order is placed, measures the tick value, defines the invalidation point, checks the margin, checks the session, checks the calendar, checks the rules, then decides whether the field deserves capital. The unprepared trader asks, "Why did the market do this to me?" The market warrior asks, "Why did I enter before I understood the field?" That question is the beginning of command. Because the greatest cost of entering futures unprepared is not one losing trade. It is the erosion of discipline, the habit of entering without calculation, the habit of sizing without respect, the habit of ignoring the contract, the habit of treating rules as obstacles instead of boundaries, the habit of believing access means readiness. But access is not readiness, and access is not command. On the futures battlefield, the contract will move, the tick will count, the margin will apply, the rules will enforce, and the account will record the result. The market warrior understands this before entry, because survival does not begin after the order is placed. Survival begins before exposure. Review before repeat. Prepare before action. Segment 3. The market warrior prepares. The market warrior does not enter the futures battlefield because a contract is moving. The warrior enters only after the contract has been studied. Before exposure comes preparation. Before leverage comes restraint. Before prediction comes intelligence. Before entry comes command. The first preparation is identifying the contract. What futures product is on the field? Energy, metals, agriculture, indexes, rates, currencies. What is the contract size? What is the tick size? What is the tick value? What are the margin requirements? What are the trading hours? What is the expiration date? How does the contract settle? The market warrior does not treat these details as paperwork. The warrior treats them as battlefield intelligence. Because in futures, the contract defines the terrain. The second preparation is measuring risk per tick. Not risk in emotion, not risk in hope, not risk in confidence. Risk in numbers. If the market moves one tick, what happens to the account? If it moves 10 ticks, what happens? If it moves quickly against the position, what happens? If volatility expands, what happens? If the trader is wrong immediately, what happens? The market warrior answers these questions before the order is placed. The third preparation is matching size to command. A smaller position with discipline is stronger than a large position without control. A trader who survives can continue learning. A trader who overexposes may be removed from the field before the lesson is complete. The market warrior does not ask, "How large can I trade?" The warrior asks, "What size allows me to remain disciplined if the first move is wrong?" That question protects the campaign. The fourth preparation is studying the session. When is the contract most liquid? When does volume increase? When can spreads widen? When are reports released? When does volatility usually expand? When should the trader stand aside? Availability is not permission. A market being open does not mean the field is favorable. The fifth preparation is studying the calendar. Inventory reports, crop reports, central bank decisions, inflation data, employment numbers, earnings pressure, treasury auctions, geopolitical events, settlement dates, expiration windows. The market warrior does not need to predict every outcome, but the warrior must know when the battlefield may change. Preparation does not remove uncertainty. Preparation prevents the trader from being surprised by known risk. The unprepared trader enters first and reacts later. The market warrior studies first and enters only if the field allows it. That is command before exposure. Before entering the futures battlefield, the market warrior reviews the checklist. 1. Do I know the contract specifications? 2. Do I know the tick size and tick value? 3. Do I know the margin requirement and the exposure I am controlling? 4. Do I know the session, liquidity conditions, and possible spread behavior? 5. Have I checked the economic calendar and product-specific events? 6. Do I understand settlement, expiration, and rollover risk? 7. Have I defined the invalidation point before entry? 8. Have I sized the position by account risk, not emotion? 9. Do I know the rules of the environment I am trading in? 10. Am I entering because the plan allows it, or because the movement tempted me? That final question matters. Because futures can move quickly enough to punish hesitation, precisely enough to punish ignorance, and powerfully enough to punish oversized confidence. The market warrior refuses to enter blind. The warrior studies the contract, measures the tick value, respects the margin, checks the session, reviews the calendar, defines the risk, then decides whether the battlefield deserves capital. In the modern futures arena, many traders also encounter the market through prop firm evaluations, funded account models, and rules-based trading environments. This has changed how many traders first approach the futures battlefield. Access can appear closer. The doorway can seem wider. The opportunity can feel immediate. But the market warrior understands the warning. Access is not command. A prop firm evaluation may provide a pathway. It may provide structure. It may provide rules. It may provide an opportunity to demonstrate discipline. But it does not remove responsibility. The trader must still understand the contract. The trader must still control size. The trader must still respect drawdown limits. The trader must still know the daily loss rule. The trader must still understand payout conditions, news restrictions, trading hour limits, consistency standards, and maximum contract rules. A trader can survive the market and still violate the rules. A trader can call the direction correctly and still fail the environment. A trader can gain access and still lack command. That is why the futures battlefield must be studied as both a market and an operating environment. For further independent study, this guide highlights the prop firm arena as a major force shaping the modern trading landscape. Within the Tzu Trading War Council framework, Daryl Martin is referenced for independent study in relation to prop firms and the impact that trader evaluation models have had on the trading arena. Patrick is also referenced for independent study in relation to futures education, market preparation, and the importance of understanding the mechanics of futures before risking capital. These references are offered for independent educational study only. They are not endorsements. They are not affiliations. They are not sponsorships. They are not performance claims. They are not recommendations to buy any course, product, service, signal, evaluation, funded account, prop firm account, platform, strategy, or trading program. And they are not recommendations to join any prop firm. The market warrior does not outsource command. The warrior studies many sources, compares perspectives, tests ideas carefully, and remains responsible for every decision made on the field. Because in futures, rules are not decoration. Rules are terrain. and the trader who ignores terrain enters at a disadvantage. The futures battlefield brings the first core market battlefield sequence to its final gate. Stocks taught the market warrior to respect ownership, price, and market structure. Options taught the cost of leverage, premium, time decay, volatility, and assignment risk. Crypto taught the danger of custody, liquidity, narrative, exchange risk, and chain-level consequence. Forex taught the power of currency relationships, sessions, central banks, spreads, and global flow. And futures brings the lesson to precision. Contracts, ticks, margin, settlement, expiration, rules, exposure, discipline. This is why futures demands preparation before prediction. Before entering this battlefield, use the tools available to study. Use the search capability on TzuTrading.com. Search for futures, search for prop firms, search for risk standards, search for the treasury, search for market intelligence. Review the independent directory, study the funding pathways, compare the rules, read carefully. Look for drawdown limits, daily loss limits, payout conditions, consistency requirements, trading restrictions, news rules, maximum contract rules, platform conditions, and capital protection standards. The directory is not a command to join. It is not a recommendation. It is not a ranking of who will make you successful. It is a research starting point. Because the market warrior does not chase access. The market warrior studies the gate before walking through it. Capital is entrusted after discipline has been demonstrated. Not after excitement, not after impulse, not after a lucky trade, not after confidence without control. Discipline first, process first, risk control first, command first. Market intelligence is the gate to the war room. Before entering futures, study the field. Check the contract, measure the tick, review the margin, respect the session, study the calendar, understand the rules, control the size, protect the capital. The war room is not there to predict the future for you. It is there to help you prepare before the future reaches you. Because the contract will move with or without your confidence. The tick will count with or without your permission. The margin will apply with or without your emotion. The rules will enforce with or without your excuses. But the market warrior does not need permission from the battlefield to be disciplined. The warrior needs process. Preparation before prediction. Capital preservation before profit. Education before leverage. Discipline over emotion. Command before exposure. This is the future's battlefield. Do not enter it casually. Do not enter it emotionally. Do not enter it blind. Enter prepared. Enter measured. Enter only when the plan gives permission. And before your next move, enter the war room. TzuTrading.com. Preparation before prediction. Enter the war room before your next move.